Hello, welcome to my channel. This is Money Mind. Welcome again. And if it's your first time, just make sure you subscribe. Because I'll bring you on this channel. I talk about money, investing, and anything related to your finance. So let's go. The topic of today will be on the Vanguard Growth ETF Portfolio, which is a VGRO. This is one of the biggest new one asset allocation, we call it, and of course it was introduced in 2018. So we'll go through overview, performance, portfolio data, price distribution. And before we go deeper into this, the reason why we do want to consider this, especially at this time, is because now the market is becoming more volatile, and a lot of people sometimes they can't stand the volatility. You know, as we say, you can't stand the heat, get out of the kitchen. So look at this. This is the Nasdaq, Nasdaq 100 or QQQ. Today lost almost 4%. Like 3.5%. That's a huge. For some people, will be like, oh, get a panic. So there's other funds who are more not too volatile, and these are kind of funds you might want to be interested in. That's what I'm bringing to you, especially for Canadian, to buy VGRO, because it's a fund that you would have all your mixture of stocks and bonds. Very little for most young people. I think this is more suitable, and for a lot of people, actually majority investors, actually this is one fund you can buy and set it and forget it. So VGRO, first of all, objective. Vanguard Growth ETF Portfolio seek to provide long-term capital growth by investing in equity and fixed income security. So investment strategy seek to achieve its investment objective by primarily invest in equity and fixed income security. It may also do either directly or indirectly. So they can buy stocks directly, or they can invest through investment in one or more exchange traded funds managed by the manager or an affiliate, right? Or certain other investment fund. So this is a fund of funds. So that means they can invest. A VGRO is a fund that has other ETF that are combined, are built into it. Those are more of a technical, which you don't really have to know all of that, but they either can buy, let's say, Apple directly, or they can just buy in an ETF, for example, total US stock market, and they put in it. So that will represent Apple as well. In seeking, one of the investment strategy in seeking to achieve investment objective under normal market condition. So sub-advisor will strive to maintain long-term strategy, asset allocation, equity, which was 80%, this is stocks, and 20% bonds, right? And they will rebalance from time to time to make sure it doesn't deviate too much from its asset. It's a target goal of 20-80 or 80-20. The underlying funds are expected to be index funds. So as I say, it's a fund of funds. So there are 7 ETF included in this one fund. So it's just one fund that has 7 ETF in it. And we'll go deeper a little bit here. You can see management fee is about 0.22 basis point. Management MER, management expense ratio, is 0.25. So 0.25 of your money. So let's say if you invest $10,000 in this fund, you're gonna be charged $25 a year. If you invest $100,000, then they're only gonna take a $250 as a management, including everything, taxes and everything together. So out of your 100, you're gonna get paid $250. I think that's a very reasonable and very low as compared to most mutual funds out there, right? Inception date, the fund was incepted on January 24th, 2018, so about 3 years ago. Benchmark is internal component. Net asset value at the moment right now is 1.9 billion. It's almost 2 billion. That's a huge for Canadian market. 12 months trailing yield, of course, because it's not it's more of a growth, so very little dividends been paid, so it's about 1.80%, so about 2%. Dividend schedule, of course, quarterly. They pay dividend quarterly. Income distribution per unit last time was about 12 cents, and eligibility for investing. You can invest in either all the accounts that you have, RSP, TFSA, regular accounts, and many more other accounts. Of course, price of today was 29, and you can see today it only went up 1.3%. As compared that one to the Nasdaq, look at that. That's a 4%, almost 3%. So you might not be comfortable with that level of volatility for funds like the Nasdaq 100 or even S&P 500. SPY, it went down almost like 2.5%. So if you can build your portfolio with just straight equity like that, then this fund will be perfect for you. Asset allocation mixture, you can see here 80% bonds, 80% stocks, and 19.79, about 20% it's bonds. And of course is put little 5 whatever short-term reserve. That's just a cash. So when people put in, it just it says there just as a reserve, less than 1%, less than 0.5% actually. So it's very little cash. So it's pretty much all you want to be invested in bonds, 20%. We come here to total return. So total return since inception, you can see the chart here. We could have gone into deep total return performance here, but we don't have to go there. We can just go performance right now. We can go to total return. You can see 1 year is about 9%, 3 years about 7%. Since inception has been returning, so in 3-year time it's been returning 7% annually. So it's not bad. That's a pretty good for a fund like this. Growth of your $10,000 if you invested at that time of inception, which was 24th of January 2018. Today you would have, with this market little correction just happened, you would have almost 12,500. So that's not bad at all for a fund like this. Vanguard US total stock market, which is about 32%. Canadian markets about 23%. It has developed all cap except North America. So these are the country like Europe, Korea, Japan will be 16%. Bonds, you would have Canadian bonds about 11% of Canadian bonds. Vanguard emerging markets, all cap, will be 6% of emerging markets, countries like China, Brazil, Mexico, South Africa. This will be about 6% of it, of that fund. There is your money in it. Vanguard Global ex-US aggregate bonds. So this is global from other countries like Europe and all the other places, apart from US. It's about 4% or 5%, I can say. Vanguard US aggregate bonds. So US bonds about 3%. So it's a mixture of stocks around the globe, and also your bonds allocation also is from around the globe. There's bonds in the US, Canadian bonds, and also global bonds. Top 10 holding of this fund, it will be sector weighing. Top, it says here there's data is temporarily unavailable, but will be your top will be Royal Bank of Canada, RBC, Amazon, Facebook, Alibaba, Scotiabank, Google, Johnson & Johnson. Those are one of the top 10 of these funds. Financial, so when you come to a sector, because this is just a top 10 stocks, now we come to a sector itself. How many sectors have been invested in this? So the first sector, you can see the one that take a big chunk is financial, 18%, technology 18%, consumer discretionary 13%, industrial 12, healthcare 9, basic materials 6, energy 5, consumer staples 5, utility 3, telecommunication is 3, real estate is 3, So the biggest, of course, is technology and financial. That's why I say, like, Royal Bank and Scotia Bank and all these major banks in Canada, and also US banks. JP Morgan Chase will be part of the bigger bank in there. And also there's technology, of course, the Amazon, the Google, the Facebook, Tesla now. So that's the thing. And top market allocation exposure, this is geographic. So those was just a sector, and this is geographical. So United States of America, out of your money being invested, will be US, and will be 41%. Canada will be about 30%. Japan is 5%. China is 3%. UK is about 3%. This is one of the greatest funds actually to invest your money for 2021. If you can really stomach the volatility that the S&P and the market right now is more volatile. So this is a more balanced fund, and for a lot of your young people, I think it's a great way to invest your money. So if you like this video, just make sure you hit that thumb button. And what do you think about this fund? Do you like to invest in a fund like this, or do you like more aggressive? So just let me know in the comment below. Thank you very much for watching.